Deinma Iyagba, currency trader at UBA, joins us from the banking hall for a recap of this week's trading at the fixed income and FX market. Deinma, thank you for joining us today. Let's start with trading today at the fixed income market. Talk us through the performance of the market.
All right, on the fixed income market, what we've seen is a lot of appetite for the buys. We've seen rates drop down from 14 levels to 13. A lot of fixed income traders are buying on the long end. Not much activity on the medium to short end, but on the long end, they've driven yields down from 15 when we started at the beginning of the year to right now 13 levels.
Why are we seeing this sudden shift?
Well, there's a lot of appetite for the long-term bills. We've seen fresh FBI flows into the market. And with those fantastic yields, yes, Nigeria started benefiting from the emerging market flow. Speaking
about market liquidity, we did see the central bank holding an OMO auction over 1 trillion naira, and we're told that despite that mop-up, there was still sufficient liquidity at the market. Talk us through this OMO sale and the yields that we saw, and what investors really want when it comes to the yields, and of course how this could be a determinant or not going forward in terms of the kind of offer and yields that we're going to see from the CBN.
Okay, what we saw on OMO was despite the 1 trillion sales, we still had a lot of leftover demands, and this demand spilled over into the market, dropping markets down to the 13 levels which we are currently experiencing. We've seen a lot of appetite, a lot of foreign demand for these bills on the long end tenor, and this has continued to trend rates downwards. We first saw it in the PMA and then now the OMO. The CBN is actually trying to mop up liquidity, but it's like as soon as they mop up the first one, the next FPI is in for some more of our bills.
Now, if this trend continues, how low could rates go?
Well, if this trend continues, I see rates moderating back to around the 12 levels, but I don't see it going there immediately. Maybe next safe levels will be 13 levels flat, but before it moderates downwards. But it's just more of the sudden push for the long-end bills that are moderating rates downwards.
Obviously, this is good news for the federal government. I mean, from a debt service domestic borrowing point of view. And I was talking to a trader earlier today about the implications for the federal government, and if we could see the federal government going to the Eurobond this year, and the DMO trying to balance that 60-40 balance between domestic borrowing and foreign borrowing. What are your thoughts?
Well, yes, it's always good news to know that your debts are at reduced rates. So, yeah, I see the federal government are going to jump in on this rush for the Nigerian T-bills, and yes, capitalize with an offer of the Eurobond. So with what we've seen is just the wait for the elections to be completed has passed. So we've seen a lot of foreign investors jump in on the Nigerian yields, and we see this is going to continue for the next 6 months, preferably.
Okay, let's quickly talk about the FX market now. We talked a lot. You and I also talked to some other traders in the run-up to the election, those measures that the central bank took to protect the naira, obviously with election spending and dollar liquidity, a lot of dollar liquidity in the system, the CBN was able to effectively curb that, and we saw that sustained stability in the naira versus the dollar. Do you see this? Just share your thoughts on how you saw how the naira, if you will, survived that period and trading going forward.
Well, the CBN did a great job run up to elections, even till post-elections, holding the naira steady. Even with the huge demand we faced in December, the naira depreciation still wasn't much. But coming into the beginning of this month, we've seen a lot of inflows into the country, and that has helped with the dollar rates. We've seen the naira appreciates from a 366 level to a currently 360 level. So, and we see this appreciation will continue. We see a lot of demand for our local debts, and that has actually affected the FX market. The INE market fixing was about 360.8 as of today. We've seen it steadily drop through the year from the beginning of the year till now, and with the 360 level stability, yes, the CBN has done a great job. And I see for the rest of the year, Naira will remain stable at around this level.
Well, I mean, a lot of that is, I mean, to a large extent will depend on how much accretion we see with the foreign exchange reserves. And we've heard OPEC now say that it may extend those cuts, output cuts among its members and some non-members to keep oil prices high, or at least where it thinks it's profitable. Do you see this happen? What are your projections in terms of how oil prices could play out, and how the central bank, or if the central bank, will be able to see that accretion at the reserves?
Yeah, no doubt the central bank will see that accretion in the reserves. We've seen with the oil prices currently around the 60 levels, the central bank is quite comfortable with these prices, and OPEC's decision to maintain the cut in production is also positive signals for the Nigerian economy. The accretion on the reserves will start, and I see it rising up until maybe second quarter. But as it is, it's all green light for the Nigerian economy in terms of oil reserves, accretion of flows and everything.
Okay, Deinma, thank you for sharing that with us today. We appreciate your time. Deinma Iyagba, currency trader at UBA.